House Ways and Means Committee ranking member Kevin Brady and Senate Finance Committee Chair Chuck Grassley are out with a new USA Today opinion piece amid some anxiety over reduced tax refunds this year. It's titled, "Lower Tax Refund Funds Show How the Republican Tax Cut is Keeping Money in Your Hands All Year." And Congressman Brady joins us this morning. Congressman, it's good to see you. Thanks for joining us.
Yeah, Joe.
It's kind of embarrassing that we need to say your refund depends on how much you paid in over the year, and it really has nothing to do with the absolute level of taxes that you're paying. But we also had to tell AOC that the $3 billion, you can't really use that to pay the teachers because you don't get it unless Amazon comes. So we're in this weird world where even the most basic math seems to escape a lot of people, I think.
Yeah, aren't we? I was listening to your conversation with President Bullard, wishing I was there in that conversation about productivity and sustainable growth and all that. But we are talking about refunds because I think this is sort of this misleading narrative right now. A couple quick points. Obviously, the refund picture isn't even accurate. We're a couple weeks into a very unusual tax filing season because of the partial government shutdown. The refunds vary from year to year. That's natural. And it doesn't even reflect the refundable credits like an earned income and the child tax credit that are an important part of these. So A, the picture is not accurate, and B, if it were, it has zero to do with your tax bill, zero to do with it. It's merely what you overpaid the IRS in the paychecks last year. And our thinking was in tax reform, most families live paycheck to paycheck. You know, it's best to drive that into their paychecks last year, starting in February and March, rather than delaying it a year. But look, people can go at work, fine tune, how much they want in their weekly or monthly paycheck, what they want for the refunds, and maybe this conversation will spur more people to do that.
Well, the refund issue aside, and you got Andrew on that, I think, Andrew, you agree with that. But
I absolutely agree. Congressman, I absolutely agree. It's, the illogic train going on in America right now over financial literacy is shocking.
But
so on this front, I'm with you.
But I don't think he would agree with you, Congressman, that anything proves the tax cut has worked for anything, right? You don't really think it's worked. I mean, the tax revenue is down for the year, right? When it was all said and done, it was down slightly. And people point out, well, because corporations paid less in taxes, but it was a corporate tax cut, right? That's kind of weird that they finally realized that might be the result, of a corporate tax cut is that corporations paid less taxes. That was like a revelation to some people.
Yeah. So my belief is that everything proves this tax cut is working.
Now you got to address these comments
in the economic area from everywhere. And look, Andrew's a great part of the show. I love being on, and he's smarter than a whip, as you know. But I think you can look economically, not just in the headline numbers, which are very encouraging, but look, blue-collar employment is surging. Low-income workers seeing the highest wages in a decade. Small business startups are skyrocketing, and I still believe at the end of the day, while revenues were relatively flat last year, even with the individual tax cuts, we saw $105 billion more in individual and payroll taxes. Why? Because people were going back to work and they have higher paychecks, all of which over time, I think, generate more revenues.
Congressman, how do you square that, though, with the increasing deficit? And it is substantial, and it is an issue that historically the Republican Party has made an issue during elections.
I agree, but it is on the spending side that drives the deficits. We did have, even with the tax cuts fully in place, relatively flat on the revenue side, and the difference between 2%, that old slow growth we were getting used to, and 3% for federal revenues is about $44 trillion more for federal coffers over time. We think growth matters. Unfortunately, the spending still continues at a higher rate. That's where we really have to get serious.
Congressman, would you invest in the IRS right now, given how at least it appears to be woefully underfunded? People inside the IRS publicly talk about it.
Look, we did provide, I think, $200 to $300 million more for the implementation of the Tax Cuts and Jobs Act. We've always said, look, the IRS just sort of opens its books, is transparent, really focuses on customer service. More dollars will be coming, and I'm really comfortable with that approach. But the reason we passed out of the House last year, almost unanimously, the first restructuring the IRS in 2 decades, was really to redesign them toward customer service, toward taxpayer privacy, toward really a 21st century agency. And I'm hopeful this year, working with the new Democrat majority, kind of hopeful we can get that restructuring to the president.
Congressman, for every dollar that is invested in the IRS, the CBO says that you would receive $6. I don't know of any business when it comes to receivables that wouldn't invest in collecting the revenue that it is technically owed. Why not in this case?
You know, so our belief for some time has been the IRS is not using the resources it has at hand. In some cases, there's been a political agenda. In other cases, they really were distracted, diverted to implementation of the Affordable Care Act. So we really think a refocus first will tell us what type of customer service we can get. And I will tell you, a lot of that tax collection that goes uncollected comes from an overly complicated tax code. We hope, you know, with the new changes we made, will actually be helpful in that area.
Congressman, this is Jim Bullard. Great to see you this morning.
Hey, Mr. President.
Yeah, a lot of the change was toward itemization, so there could be less people itemizing, and so that seems like a big improvement in tax simplification that maybe got lost a little bit in the discussion. Is that right?
Yeah, I think it has. So more than 9 out of 10 Americans will be able to use the simplest form. We call it a postcard because that's what it resembles. 4.5 million families won't be doing their taxes twice with the AMT. And then with this full and unlimited expensing, a lot of small businesses won't be caught, those are individuals too, won't be caught up in that maze of depreciation schedules. So while we didn't make it as simple as we had started out to do, we still made some pretty good strides.
Well, it's going to be much tougher to target conservative groups, I think, from here. But, you know, hope springs eternal. Hey, so if we do, Jim thinks we do 2.25 for 2019, down from 3% on GDP from 2018. That will give critics, I mean, it's better than the Obama 1.8 or whatever it was average, but it still makes it look like a front-end loaded, typical stimulus, one-time Keynesian boost instead of the long-term structural change that you were looking for. Would your argument be that the counterfactual, that we'd be below 2.25, or do you hope we do better than that in 2019?
You know, I expect us to do better than that. And to your first point, this really wasn't designed for the short term. It was designed to do 2 things, I think, besides provide that boost, just to sort of change the trajectory of the economy. First, it was designed to impact the location decisions by businesses. The old tax code said, look, move your manufacturing, your research, your patents outside the country, and if you make a profit, don't bring it back to invest. We've changed all that. It takes a while for those location decisions, which we're seeing, to manifest in the economy. Secondly, President Bullard will appreciate this as you do. We really designed it to increase overtime productivity. That's pure wage growth. That's more pure economic growth. That takes some time. So I will argue, I think the best of this new tax code is yet to come because we dramatically changed bad incentives and turned them around.
Congressman, though, related to those incentives, what do you make of what seems to be happening in this country, especially on the Democratic side of things, a number of the tax proposals almost in response to this proposal, not proposal, but the rules that were put in place about taxing the wealthy, and the increasing polls on both sides of the aisle that suggest that the country wants to tax the wealthy people much more significantly than you have?
Yeah, so I think it's easy to throw out that claim. Most people will say, look, I'm not the wealthy. Go ahead and tax them, until you talk about the impact it has on the economy. I will tell you, these are the wrong decisions. We're moving back toward the bad old tax code. What I wish we were talking about is the greatest limiter to economic growth in America today is workers. Workforce ought to be our #1 economic issue that every candidate and every elected official is talking about. It's slowing growth now. It will slow growth even further in the future. That's where we ought to be focused.
I don't know why we can't get 99% to tax the 1%. It just seems like math, doesn't it, Jim? Why can't we get a 99% poll? 99 says yes, 1% says no. What's wrong with these people? Hopefully no one's aspirational. Anyway, thanks to Congressman Kevin Brady, Ways and Means Committee ranking member from the great state of Texas. They would take Amazon, I guarantee you.